Good day, ladies and gentlemen, and welcome to the show. Glad to have you guys here on this November the 15th, Monday, November the 15th, 2021. Thank you for tuning in. Now, you know what? Interest rates, we've reached a point where I remember when interest rates were pushing up over 3%, 3.25, I think they went up to, and they peaked. And I was talking about how they'd affect the markets. They didn't really, I'm talking about the 10-year, of course. Didn't really, and that wasn't very long ago, you know, just a couple years ago, I think about 2 years ago. Anyway, the market could take and withstand 3.25% on the 10-year. We have just now reached a point where the market cannot withstand, it can't even withstand 2%. Now the Fed's talking about tapering. Isn't going to happen. It's all talk, because if they do taper, those interest rates in the 10-year are going to climb and the market's going to fall out of bed big time. They know this. And when everybody else figures out that this isn't going to work, in other words, a taper isn't going to work. I mean, they might try it, but I don't even think they're going to try it. When everybody figures out this ain't going to work, this is an open door to inflation, you know, and this is what's getting ready to happen pretty soon. They're going to learn that the Fed is all talk and all bark and no bite, basically, essentially. We're seeing the gold and silver markets getting right on the verge. I would call it being on the verge of big gains. They've made some gains recently, and now they're in a very narrow trading range, and they're getting ready. It's consolidation. They're getting ready to move. And what actually could happen is a lot of the money we've seen go into cryptos could go into a reverse trade. And what that basically means is people are getting up to a certain point with crypto. Bitcoin's getting up near $70,000 per coin. And they could trade off some of those for precious metals. And of course, they're going to want the real physical metal. As this price on the physical metal starts to rise, we're going to see more demand on the physical product, which is already under a lot of stress in the market. We're going to get right in there and we're going to take a look at what the prices are of the physical metals. Let's see, we're going to get the chart started right here. Okay, the charts are going. First thing we're going to talk about is Bitcoin. Bitcoin, now remember the other day I talked about this new thing with Bitcoin. I didn't know it, I forgot what the name of it is. It's called taproot. Been done already. Bitcoin's biggest upgrade in 4 years just happened, and here are the changes. This new taproot upgrade, you know. Taproot means greater transaction privacy and efficiency, and it will unlock the potential for smart contracts, which can be used to eliminate the middleman from transactions, and also it's going to make Bitcoin, I believe, more what they call fungible. There's a little problem with Bitcoin. It was starting to crop up. Anyway, it's a big improvement for Bitcoin. It's just come in there, and it's actually going to make that combined with the Lightning Network, which has already been established. Bitcoin looks like it's more the coin than ever if you're going to buy cryptocurrencies to get into Bitcoin itself. Bitcoin is looking really good. Let's take a look now at the gold and silver price. Like I say, you guys, gold and silver could be getting ready for a big pop. Now, just because it's going down a little bit here on these charts are in a very narrow consolidated range. And so the up and down movements aren't that big. We're looking at down 30 cents on the silver price today, but it could very well turn later in the day and go higher. It's at 25.01 right now. It's a good time to take stock of how much precious metals you have. It might be a time to accumulate depending on your situation in life. Let's take a look at gold today. See what it's doing. Gold is down $1.30 at 1863.90, and gold is actually trending upwards today. And you know, silver will follow gold if gold trends upwards. But if you look at where it entered today, I know it's down $1.30. But if you look at the price point where it entered today, what you'll see is it is trending upwards today. gold. 1863 for gold. Now let's take a look at cryptocurrencies and see what they're doing. I'm going to have to refresh the page here. It's at 2.865 billion right now, and we'll refresh the page. 2.856 billion. So it's having a little bit of trouble with Bitcoin trying to get over that $3 trillion mark. It approached it the other day. It backed off, went back down to 2.7 from 3 trillion, and now it's back up to 2.85. You know, it's getting close to going over that $3 trillion mark. You know how many years it took Bitcoin to get up to the $1 trillion mark? Bitcoin and the other cryptocurrencies? From 2009 all the way up to I think it was 2020 before it finally broke above 1 trillion. And now, here we're all trying to break above 3 trillion, just that quick. Well, this is what's called an exponential. And what we got going on with the cryptocurrencies, they're in an exponential function. As we've seen these gains of price now, there's crashes involved in there on that exponential function. But if you look at where Bitcoin started in 2009 and look at where it is now, you can see the exponential curve in the price ratio. And this is why Bitcoin is over $65,000 a coin. They were like 5 cents each when they started way back in 2009. Let's take a look now at the Dow Jones today. Is at 36,158. I would say that this is a melt-up in the market. A lot of people have said that too. But it's not a melt-up that can't continue. So, if the Fed doesn't do this big taper and stuff, and this amount of inflation that we have in the system, and the amount of money that's been printed, and also the amount of money that is being held in the banking system, this money starts to move, and the velocity of money starts to go up, we could see this market hyperinflate. And what that basically means is the market could go up. Some of the best performing stock markets in the world have been stock markets that have been in countries that are undergoing a hyperinflation. And ultimately, that's what we got coming here. We've got a problem with the money, with the way the money is created. The debt can never be erased without all the money disappearing. And basically what it goes back to, guys, is when they established the Fed and they started to create this money, first they were linked to gold. It was linked to gold, so they were prohibited from creating too much monetary units. But then in 1971, Nixon took us off the gold standard, and he basically cut that tie to gold. Then they could print as much as they wanted. And what they did in 2008 was just as important as what Nixon did in 1971. 2008, what they did was then they started hyperinflating the dollar through different means like quantitative easing. Well, quantitative easing is pushing a lot of money out there, but it goes into a liquidity trap. It becomes trapped within the banking system. So what it does is it increases the monetary supply, but at the same time it slows the velocity of money because all that new money is not moving. It's in a liquidity trap. But it's still being created in the system. So what it does is it exponentially increases the amount of debt, and that's what we've seen. You know, and at the same time, they have to keep interest rates artificially low. And so what this creates is a problem within the monetary system now that has grown so large. The liquidity has become so over leveraged within the system that they cannot let it expunge from the system or undergo a depression was what it would be. In 2008, if they let the system continue to purge itself, and if they hadn't have propped up the system would have purged itself out, and we would have went into a massive depression. This is what they're fighting off now, and to keep these bubbles expanded, to keep the system, they have to keep printing ever larger quantities of money. In other words, the printer has to go burr. It has to continue to go burr in order to keep the system from contracting. And so what happens is now we're in this thing where they can't let it go anymore, and it's become so large, it's become out of control. And now the Fed is become basically a laughing stock because of this. You ever heard the saying they're trapped? Yes, they're trapped. They can't let interest rates go up. And so now we're going to finally start to move toward the inevitable conclusion of this, which is a certain period of time out. I can't tell you guys exactly when it's going to start, but I have a good idea when it's going to start. Probably within the next 24 months. And it is actual hyperinflation. We're heading toward actual hyperinflation, not just inflation. Now, I predicted this inflation that we're in now, but the hyperinflation is out there a ways yet. We might have a year before we start to get into the first initial stages of the actual hyperinflation. And you're probably going to see it in products that you really need. Things like food, things like rent, things like these things are going to go way up, the things you're forced to buy. And some of these items that you're not forced to buy might actually just either move up slightly in price or there's certain things you need in order to live, guys. And this is the things. These are the things that are really going to go up in price. So I've heard people talking about there, like if you bought cans of tuna, they've doubled in price or whatever, and silver's gone nowhere. And this is true. But silver and gold have been suppressed. They are going to catch a bid at a certain point, and it's going to be really big because the hyperinflation is moving ahead of them faster than they're moving up compared to other things. So anyway, guys, let's move on because I'm getting bogged down here just a little bit talking about this. We're looking at an oil price today that has fell back below $80. It's down 83 cents or 1%. And you might see that reflected at the pump a little bit. Move index today, it's up at 78.61. And we're going to do bonds and rates now. And we're looking at falling yields except for the very long end at 30-year. Not much movement in the bond yields today. At 1.58 on the 10-year. And we still have that inversion between the 20 and 30-year. Now let's take a look at the U.S. dollar index in order to close the show. It's at 95.13 and it's going along sideways. So this has been your show for today. Thank you guys for listening. Like and subscribe, and we'll catch you guys in the very next episode. Bye-bye.